Good morning, trade pros. Welcome to Morning Market Update for Friday, April the 24th. I hope you guys are having a great day. Again, the smoke here is this diffuser of essential oils. Nothing to worry about. Okay, I want to talk about a few things today. Yesterday in our YouTube update, I asked you a question and then I ended the YouTube accidentally. And it was kind of funny. We laughed at it that it was particularly cruel. So today I want to pick up that discussion in our morning market update because a lot of people are wondering the same. Then we're going to talk just about where markets are at and some economic news that came out today and a big one at the top of the hour. Okay, so let's get started. We got quite the morning market update. Thank you guys for tuning in. Let's first take a quick glance at stock markets because I'm starting to see things in the paper saying markets are up and stock markets are going up and holy crap, new bull market. But let's just take it back a step and understand that S&P dropped 36% in 33 days, right? That's 33 calendar days, 22 weekdays. So in a little over 4 weeks, we dumped 36%. That's the fastest slide ever in the history of stock markets. It hasn't ever dropped more faster. And so now that we're kind of past that period and it doesn't hurt anymore, we've tend to have forgotten it because now we look at it and say the market is up 28% from the lows, all right, which is 2174.5 on the S&P. But here's the thing. If we go up 36%, do we wipe out the losses before? If we drop 36%, we rally 36%, are we break even? Think about this for a moment. A very important question that very, very few people understand. And it's simple math. Okay, let me ask you a different way. If we lose $100, right? Or sorry, if we lose $50 out of our account, that's a 50% loss. All right, and then we make up 50% again, we're at 75. We're not at 100. Remember, it takes a 100% gain to offset a 50% loss. So we're actually up 28% from the lows, but we're still down 18% from the all-time high. That's where everyone got complacent and long. That's where everyone forgot about valuation, forgot about fundamentals, forgot about anything. There's just no risks at all. Everything was just hunky-dory. Get long the top at 3,400. Okay, and we're down 18% for that. So first of all, the market's not up. It's down, and it's currently consolidating. So that's what you got to understand. The coronavirus shock was very quickly priced in with all these computers these days working behind the scenes and moving a lot of the volume in the market. Things get priced in very quick, and we saw what a really sharp sell-off looks like. It was historic. That's electronic markets for you. Okay, we didn't have this degree of electronic trading until in 08, 09. So it took a little bit longer. We definitely didn't have it in 01 as much. So that one took a little bit longer. So the movements are speeding up and getting more volatile. So the other thing you have to realize is, why is the market going up more recently from those lows? Why has it moved up so much? Because the stock market is not the economy. And if you're using economics for your investing model, if you're saying, look, here's how when the economy shifts, I'm going to shift my exposure, you're really using something that hasn't worked since 08 or 09. Okay, from the moment that the Fed launched the TARP, Trouble Asset Relief Program, in 2009, all right, nothing's ever been the same in terms of traditional economics, right? Economic degrees are pretty much rendered useless overnight with that one move. You still learn a lot. Obviously, economics is more of a way of thought than it is a process or approach. Okay, so anywho, the Fed here is the key. If you chart a picture of the S&P, okay, so S&P 500, and then versus the Fed's balance sheet, which means when they provide liquidity to the market, they buy bonds, their balance sheet grows. If you chart the two side by side, you're going to know what's driving the market. Very quickly, very simply, and very efficiently, you'll have your answer. Okay, so it's going up, but look what the Fed's done. They've injected so much liquidity. Their balance sheet's now at $6 billion. Okay, think about this. In 2018, in December, we were raising rates and unwinding the balance sheet. And I told you guys, all the Trade Pro members, there's no way they're ever going to unwind this balance sheet. It's going to cause the market to plummet. The market plummeted. They started adding back to the balance sheet. The market's rallied back up. Okay, look at a chart. It'll blow your mind. I'm not kidding you guys. So what could you do as an investor or a trader? Stop trying to predict where it's going. I think that's the problem. Everyone's trying to come up with a model to dictate where will the market be. And I'm here to tell you this. If no one knows out there, people who, have all these crazy degrees and PhDs of mathematical models and all these algorithms, if they don't know any better, how the hell are you supposed to? Okay, and I ask that seriously. Nobody knows where the market's going. Anyone who tells you otherwise is lying to you. That's just how it goes. And they're probably lying to themselves. If they're serious, then they're probably borderline delusional as well. So you want to stay away from that. Okay, we want to stay away from committing capital to delusional thoughts. Nobody knows where it's going. What the problem is for traders and people who invest their own money is that there's a lack of skill in reading the real time. Okay, everyone wants to think 10 years from now because that's where they think the money's going to be. But before you get to 10 years, you're going to have to get through 1 year at a time. 1, 2, 3, 4, 5, 6, 7, 8, 9. There's your 10th year prediction. All right, now break that down. And every year there's 12 months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 months. That's just one of the 10 years you're trying to predict. Let's break down that 1 month. There's 4 weeks. 1, 2, 3, 4. In each one of those 4 weeks, there's 7 days. 1, 2, 3, 4, 5, 6, 7. How are you supposed to predict all of that? That far out, you're not. All right. And so I think one of the most empowering things is, people always wonder, look at the keyword on Google. Why is the stock market going up? Why is never a good question to ask. All right. Anytime somebody asks you why, they're asking you out of emotion, not out of logic, out of reason, or a need to understand. Don't answer why questions. Rephrase them. All right. It's better to ask, what are the factors pushing it upward? All right. What would it take for it to stop? And even those are useless because you don't really know where this thing's going to go. The most important question that I can help you answer, and what we do at TradePro Academy, is to answer this. Forget the why it's going up. Look at the real time right now. All right. What is happening? Based on that, what is your move? Because the market can get to wherever it wants. It doesn't mean that you're going to be part of it. I'll give you one quick exercise. All right. If I could tell you where the market closed today, I'm going to tell you, for example, it's going to close at 3,000 even. Now it's trading at 2,805. Guarantee you it's going to close at 3,000. Can you make money with that information? Can you? What do you guys think on YouTube? Our members in the community already knows. Yes. Now, what if I told you? Great, you probably could. Now, what if I told you have a 5-tick stop loss in the S&P 500 futures, and you had to get there? Could you do it? Now, that's interesting. Even though you know it's going to 3,000, when you introduce risk management into the process, it gets so much harder. It gets to the point that even though you know where it's going, you're still not going to make money. That exposes the fact that the real time is what's important. All right. We tend to think so far out that we have no control, and it makes us feel powerless. If somebody says, I don't know where the market's going in the next year, what should I do? I don't know either, bro. I don't know either. I'm just trading it for right now, and based on right now, making decisions. Very important point I wanted to mention, because I get this question a lot just from my friends around my circle. They're all looking for explanations for me. I'm like you too. I don't have an explanation, but I am trading it with you and making money. All right. Somebody said don't use a stop. Well, you could try that approach for Webcoin. I know you've been trading for a while, and I know that's a joke, and I know what happens when you don't use a stop. I do. All right, let's get on to the news for today. I hope you guys enjoyed that little piece. I thought I'd explain it to you. Exactly. Drink Forex. These markets are terrible. Don't fight the Fed. Trent, is that you? Trent, my brother. What's up if that's you? All right, so Gilead had a drug trial today. The shares whipsawed on Thursday for the second time in a week. All right, a summary of its trial drug appeared that it was a complete failure against fighting COVID-19, caused the market to dump yesterday in the afternoon, the early afternoon. All right, they said that the results were mistakenly published. They were taken down from the World Health Organization's website and said that they're inappropriate characterizations. Definitely two words that, when used together, suggest bullshit. And then Gilead said that their own clinical trial of the therapeutic drug is slated to be released at the end of the month. All right, so there's a little bit of back and forth. This whole situation hasn't been very friendly. News is leaked. They've refuted it. They've leaked their own news and refuted their own reports. It's just a mess. I'll tell you this. You don't really know how long drugs will take to come out. It has typically taken 12 to 18 months. All right. Okay. And that was interesting. A great little way to wipe out the sell stops yesterday, wasn't it? All right. After all day of just riding that consolidation. That's what we had for you yesterday. We told you that we're going to consolidate. We're probably going to hold tight in this range because we need to get some more new information. We priced in this massive, double black swan event, Now we've rallied upward a little bit, and we're going to just sit here and bubble for a little bit. The pot's on simmer. Okay. Looking at some of the earnings from yesterday, Blackstone is up 4.5%. Capital One's down 1%. Intel's down 6%. Union Pacific's up 3.5%. Okay, Capital One actually was a pretty good report people are looking for, and it didn't do as bad as expected. But markets are down as a whole. Europe failed to pass another round of stimulus. Japan's down 1%. Hong Kong's down 0.6. China down 1.1. India down 1.7. So red across Asia. In Europe, London and Paris down 1%, along with Frankfurt. But futures in the U.S. early on have recouped quite a bit of the losses from yesterday and have actually stretched some gains up about 0.5% across the board. Crude oil has stabilized down 0.6. Gold is up the same into these mid 1700s. The shortage of gold continues, the physical gold. All right, looks like the crude madness has settled a little bit. I found this interesting. I skipped the whole section. The House of Representatives passed a 484 coronavirus bill last night. This is also a little bit of the upside driving it, which is a replenishment of the PPP, the Paycheck Protection Program. There we go. Not the PPT. That's a whole different. It's a whole different thing. And the SBA, Small Business Disaster Assistance. All right, and expended capital and grants to hospitals for COVID-19 testing. This is what I found interesting. Treasury Secretary Steve Mnuchin said that he's going to require public companies deemed critical to national security that seek a part of their virus-related relief packages to offer an equity stake to the government. It's interesting. I like this. You take my money, you give me a piece of your company. That's how it works. If you need it that bad, you're going to be willing to give some up. Right? And then you won't have institutions like Harvard saying, yeah, free money, give me more, even though they're like the largest endowment fund in the world. Right? Probably not when you look at Norway. But for educational institutions, hands down for sure. Okay. So very interesting. He said for private companies, in his discretion, he may accept senior debt instruments or other financial interests. I like that. I honestly like that being added in the stipulation. If you're going to get money, you're going to have to give something. Otherwise, if you don't want to give anything, you're not desperate enough to take it. And if you're not desperate enough to take it, somebody out there right now is. We should save it for them. 8:30, we had core durable goods orders. This reflects new orders from within domestic manufacturers. So it suggests, how good the economy is doing in the near term or future. And it absolutely plunged. For March, it was down 14.4%. Record number. The expectation was 11.9. It dropped even more. All right, horrific print. I mean, this is terrible, but the market rallied on it. And yet again, you're going to ask why. Rewind this video and watch it, because we don't really care about the economy. Not me. I care about it greatly, but the market doesn't. Okay, at 10 a.m. today, we have consumer sentiment at the top of the hour. Watch for that. You don't want to be caught in positions during that. And then 1 p.m. we have Baker Hughes rig count. All right, I love you guys on YouTube. Take care. Have a great rest of your day. Trent, thanks for tuning in, brother. Appreciate it. I always love chatting with you. Let's catch up. Craig said the best way to eat an elephant is one bite at a time, or as small bites at a time. There you go. I like it, Craig. All right. Love you guys. Have a great day, afternoon, evening, wherever you are. Thanks for being here. Take care. Have a great weekend. We'll see you on Monday. Adios. Take care, guys. Be safe. Ciao. Trade Pros in the room. I'm going to hand it over to